Hey guys, it's Mike. How you doing? I just wanted to bring in and make a video about the signal language, and this it might be old hat for many of you, but I do want to clarify things, and I don't want ever to have any problems. All right, so I'm just going to go over what these signals mean. This is the email that comes. It's going to look very, very similar to you guys. Let's display the images. Okay. So you'll see, and for those of you that are in multiple rooms, especially if you're in multiple options rooms, remember that the signals coming from here are always going to say short-term option room signal first. Okay, so you can distinguish between the signals that are coming out from Scott and the signals that are coming from me. And then the push notifications will be the same thing. And remember, the only things that are going to have emails and push notifications associated with it are the swing signals that come off of the AI platform, the Vantage Point platform, because the day signal ones just happen too darn fast. So those are put out verbally, and then I do put a banner and then also something in the chat. But those you guys can test, especially like this morning. You have to be fast on that stuff. You just do. But anyhow, getting to these. Okay, so you're going to see the short-term option room signal. You're always going to see the ticker symbol and then what it is. Typically, since we are doing relatively short-term directional plays in here, they're all going to be call or put verticals. That's what is going to come out of here, because we're strictly trading on direction, not doing anything with implied volatility like we do in the options volatility room, as the name suggests. So you're going to see UAL call spread entry, or then obviously if it's an exit, it's going to say exit here. So if you're exiting, if you see an exit signal come out and you're not in it, then obviously there's nothing to do. But we say based on this, an entry signal, again reinforcing the fact that it's an entry signal. And then also you're going to see buy opening, sell opening, which means that most platforms make you say if it is an opening or closing position. Obviously anything that is a signal that we are not in yet, you're going to see opening, and then an exit signal, you're going to see closing. You're going to see the UAL, the ticker symbol, then you're going to see the expiration. You're going to see, I'm going to put the date in there, but when it says WE, that's weekly expiration. But so if we were trading June options, like the ones that are going out, regular June are going out this Friday, the 15th, you would see the June 15th, and I'll say regular expiration. Then it's just the strikes. 73 half call, and we're selling the 75 call. Now, then you'll see what the price is for a debit of 35 cents or lower. Of course, if you want to pay more, you can, but if you pay more and we don't get in, we're not going to be able to track it, which doesn't mean that you're on your own. It means that you're going to have to alert me, say, hey, Mike, I really like this UAL. I had whatever reason I had for getting in it. I got in more expensively than you did, and you guys never got in. No problem. But I won't know that you have the signal on because we were trying to buy it at 35. And if you paid 40 for it, then obviously I won't know that. Okay, signal is not GTC. What does GTC mean? Good till canceled. That means that the signal is not GTC. That means you don't just leave it in there. It's a day order only. That means that if we don't get filled in UAL today, it's like it never existed. So we do not leave our orders in there for the following day. The reasons that we cite for getting in on a Tuesday aren't necessarily true for on Wednesday. So we don't leave our signals out there. And then I give you sometimes it's a range. Usually it will be as long as we're trading some price or higher in the case of a call spread, some price or lower in the case of a put spread. Why do we do that? Because let's just say that United Airlines falls out of bed and we're trading $70 and not $72. Well, down at 70, obviously I'm going to get filled, and I just don't want to be out there in the wind. So what we do is we say, hey, as long as we're trading 71.80 or higher, we're good. Now that doesn't. So if we go below 71.80, that doesn't mean we canceled the order. That just means that's not valid there. If we go back above 71.80, then it's valid again. So that's an important thing it can go in and out of being valid. So we could trade all the way down to $70, but if it comes back up and is trading 71.85, well, then it's valid again, unless we cancel the signal. Alex, you didn't get the email. Oh, I got the email. I sent it to myself. So why don't you private message me with your email address, and I'll make sure that you're active in the system. If not, then it is something to do with a spam folder or something like that, or some sort of subfolder that it's in. But we'll, and then if I can't figure it out, then we'll just, we'll get the help desk guys on it, because they deal with that stuff all the time. Okay, so that was just a quick review of the signal language that we use and the explanation. If there's any questions on that, let me know, and then we'll talk about that. If not, I did record this, so I'm going to put this in the Documents tab. For those of you that missed it, it's not like this is earth-shattering, but I thought it's something good to have in our Documents tab for people that are new, maybe not familiar with how we put together our signals. Okay, Alex, I will get on that right now. I'm turning off the recorder, and I will be here.